Hello and welcome. And today the issue on the table is borrowing out of trouble. That's what we seem to be doing. We borrow money at 5%, and then next year you find money at 4%, and you borrow to pay the one that was at 5%, and then you keep borrowing. But there are two schools of thoughts. When the economy is in crisis, you can do two things. You can either spend your way out of trouble or be prudent until you kind of rescue yourself. From the layman's point of view, we seem to be doing both. We can see a lot of things being spending. We are building roads, we're doing it, and we are borrowing at the same time. Yet still, we don't seem to get out of this trouble. I don't want us to go to all the nitty-gritty about what the loan does and how it does, but just sit back and let us look at the nation. Yes, we know we are borrowing. Yes, we know we are spending. So how is it that we can't seem to get the economy going so we get out of trouble? I don't know, but I've got two big financial boys in the house today. My name is Nana Sakwa. This is PM Express. I'm going to take a quick break. When I come back, I'll be talking to my boys. But as soon as the break, we'll listen to what the minister said as well. So don't move. Okay, let's go forward. Thank you very much for staying. I'll do a quick introduction of my guests, and then we go and look at the insert to set the conversation going. But sitting right next to me is my own brother, Bleo Boy, Sidney Hexley Hayford, financial analyst.
Thank you.
You're welcome.
I'm back again.
Yes, you're back again with this calculator. So today we're going to get all the details. And then I have Kennedy Thompson, CEO of Dalex Finance. Kennedy is welcome.
Thank you. It's Kenneth Thompson.
Kenneth Thompson.
Yes, Kenneth Thompson.
Good.
Thompson, yeah.
And let's watch this inset and then get the conversation going.
The announcement was clear that Ghana is going to embark on roadshow. And we gave a date, and the date will close the roadshow. And we gave a date going further to say that the closing will be done subject to market condition. That was it. It's tactical. It's tactical. You go to market with tactics because market condition is very difficult to read. So that was the premise. So what happened was that the Minister of Finance led a delegation. The Minister of Finance led a delegation to the roadshow, including the governor, myself, and the team from the Ministry of Finance. So we were all there. We started from London. We split into two. Team San Francisco and Team LA. I went to LA, Minister took a team to San Francisco. Okay, in the end, we came back to Boston, continued with the roadshow. In the end, from Boston, we came to Washington to conclude the roadshow. And let me assure you that, in summary, the perception out there is massive. The way the public, the investing community, received the Ghana story, the new Ghana narrative was impressive. The new Ghana credit story was something that everybody wanted to take part, and I was surprised. Unfortunately, at the time we announced the roadshow, the Ghana 2023 and Ghana 2026 was trading at the secondary market at around 9%. This moved at the time we closed the roadshow to about 11%. Are you in a position to issue at that time to benefit the country? Obviously no. So what you do is that instead of us closing on this, then that is what the announcement says. You extend it. And I tell you, this is EM, emerging market specific trouble, on the back of what the world is going through. And let me say that the world is going through two major transitions currently as we speak. One, on the back of China and the slowdown. And the fact that China as a country, they have decided to move away from the investment-driven growth. Where possible, that will mean that there's a possible reason why maybe commodity prices will not perform in the future. So there's a slowdown in commodity pricing as a result of China's growth coming down. And secondly, on the back of the uncertainties created by the US Federal Reserve, on a possible rate hike on the back that since 2006 there hasn't been an increase and there's a possible rate hike in the next few days ahead of before the year ends. On the back of that, people are thinking of a possible shift to safety, and because of that, it is bringing enough volatility in the market of the entire emerging market. So the spreads are loosening. Lucky enough, today we've seen tightenings as long as the spread is concerned. And you ask yourself, when do you open the books? And that is what we are doing. So it's about being extending, but not being saying that there are two different things that we've held back. That is the announcement language, and that is the strategy the government adopted.
I get you when you talk about strategy, but aren't we playing on words here? That you go into a market, you set a time period to raise some funds.
We did not set a time period to raise.
That in the prospectus, weren't you hoping to close the deal by September 30?
No. So what I'm trying to tell you is simple. I'm saying that the announcement language was very specific. That you embark on a roadshow, and depend on the market condition, you launch.
Okay.
Will you launch when market spreads are loosening, or you launch when the spread are tightening? Basic question. You always launch when the opportunity provides itself and the country is going to benefit. It's not prudent for you to launch when EMs are suffering. The market, the spreads of the emerging markets are suffering. On the back of China, on the back of US possible rate increase, on the back of certain EMs not even doing well, like Brazil economy struggling, on the back of South Africa, and all of that, and the entire EM is actually reacting in a way that is not helping the country. That is not the time to launch.
How did the yields that some investors were asking for also play in this decision to extend?
Why should I say that? You are in the market. Okay, you are in the market. So what I'm trying to say is that we have not finished the market. We are on the market. We will launch. We have done roadshow. You monitor after the roadshow, and every roadshow lasts for a while, and then you monitor when you see the tightenings. Today, for instance, yesterday, Ghana 2023, Ghana 26 was trading around 13. It comes down to 12 today and going down. So 11.3 come down further to almost 10. So it's coming down, and you will notice that it will come down. So until we see that time to launch, a possible next week, you see that there's tightenings coming in. That's what we are seeing. Then that is the time that you can say that yes, you are ready to launch. So you don't just launch because you.
So for the decision was influenced.
I'm not going to talk on this any longer. The Ministry of Finance has issued a statement. And the statement is clear. And I've explained to you that per the announcement, we were clear. The announcement was clear. There was nowhere, and I repeat, read the prospectus once again, without thinking or without guessing.
Without thinking or without guessing, let me read the statement. Now this came after this interview, and it says Ghana prices fourth Eurobond. Ghana has priced and will issue its fourth Eurobond of 1 billion at a coupon rate of 10.75%. The bond was oversubscribed, with others exceeding 2 billion compared to a target of the $1 billion US. This represents an oversubscription of more than 100%, indicating the high appetite for Ghana's credit. This oversubscription occurs within a period of high turbulence in the emerging and peripheral markets. The bond is a soft amortizing one with a tenure of 15 years, amortizing in the years 2028, 2029, and 2030. The principal will be repaid in 3 installments of US dollars $333 million in the years 2028, 2029, and $334 million in 2030. The 15-year tenure means that Ghana has become the first sub-Saharan African country outside of South Africa to successfully issue a 15-year bond. Let me come to the studio. So we have successfully, raised 1 billion. Even though I find it strange because originally they wanted 1.5 billion, but I think they settled with a 1 billion oversubscribed. There were more people who were willing to give us credit, but we just took the 1 billion at 10.75. Preliminary comments, Sydney.
And I hope you really mean preliminary.
Yeah.
Because I'm still trying to understand everything that the Deputy Minister was trying to put out there.
Well, basically, Ghana is very credit worthy, and people would want to put their money here. In summary,
you're credit worthy when somebody is prepared to give you money at a rate that you ask for. Okay, that is when you know you're credit worthy. When you go to a bank, any financial institution, you say, "Listen, I want to borrow $1 billion. I'm prepared to pay 5%." And the guy looks you eye to eye and says, "Yeah, we'll do it." That's when you know you're credit worthy. The reason being that if you are credit worthy, the people who are lending you the money don't perceive much risk. So they are prepared to accept your terms, knowing that you're going to get adequate return without any failure and without the possibility of you not honoring your obligations. Then you're credit worthy. You're credit worthy when you go to somebody and say, "I want to borrow money, and I'm going to take whatever interest rate you offer me, and I pledge to pay it within a certain period of time without fail." And the person says, "Yes, fine, we will do it for you, and we will do it as fast as possible because we believe your track record and we believe that you're capable of delivering." You're credit worthy. So when you come to using that kind of terminology, you have to be very clear what you're stating, all right, and what it is that you are claiming that you have done. So at this particular point in time, where government says it is offering at 10.75%, $1 billion, there are a couple of things that you need to appreciate. One, government set out saying that it was going to borrow $1.5 billion. It is now accepted that it will do $1 billion. Government says that the subscription, that the bond was oversubscribed twice over. All right? So, ergo, that means that they could have got 1.5 billion if they wanted to. They could have even gone for 2 if they wanted to, if they had the appetite to go for 2 and really thought that they needed it. But they settled for $1 billion. Then also, they actually then have accepted that they are going for a coupon rate which is much higher than what we had previously engaged in. The bonds that we have on the market that are landing in 2023 and 2024 are going to be selling at close to 11% on the market now. All right? So they're only 1/4% shy of what the market is determining. And that 11% has jumped from 9% and 9.5% where it was, quickly to 11%. So there are fundamental issues in the marketplace because the market is saying that we can't afford to take too much risk. That is what the market is telling you. We can't afford to take too much risk with this country bond. However, if you are prepared to pay more to make it worth our while to extend this risk, we are prepared to pay you or to take it and offer it to you at 10.75%.
Let me bring Kenneth in here. Kenneth, I mean, I know the rate is not good, but if it's 100% oversubscribed, then it means there's something good, there.
I mean, okay, let me deal with the oversubscription first.
Yeah.
The oversubscription is a spin of many things. So you want to sell something at 10. Somebody comes to offer you 7. 10 people come to, you only have 10. 7 people offer you 7. 8 people offer you 8. 25 people offer you 9. You still haven't got your price, but you're oversubscribed. So the oversubscription is really a play of words. It doesn't necessarily mean that
you got what you wanted.
You got what you wanted, exactly. It's just a play of words. But what I would say is that I'm very pleased that the government was able to raise the money. I'm really very pleased because the raising of the bond was central to the government's financial management framework this year. I know about this year because struggles, not struggles. There was a lot of talk in Parliament, a lot of comments in Parliament before it got it through. The World Bank underwrote part of it, nearly half of it, 400 million of it. Ghana is under a World Bank program So I was surprised that it could be this difficult. But the issue is for next year, because the bond is supposed to pay debt that is supposed to mature next year. It's supposed to be used for capital projects, and it's also supposed to be used to restructure. I don't know, you know, we have a lot of short-term debt, so they want to make it longer term because the price, you know, is lower. So if we're not able to get the money, there'll be big trouble. But at the same time, the problem is next year, because next year, under the IMF program that we have, we can no longer go to the market to borrow. It's out. The Bank of Ghana is no longer allowed to finance the government deficit, which is a polite way of saying the Bank of Ghana can no longer print money. So next year really is the crunch time. You know, next year really is the crunch time. But this one, if we didn't take it, we'd be in trouble. We'd be in big, big trouble.
Sydney, what can we do short term to rescue? I mean, is there any other choice? Like how Kenneth did, is there any other choice by not going to take this money? What? So today you're said, you know, I make you the finance minister. What would you do?
I've got the same portfolio, the same problems that exist.
Yeah.
Or I can go back to 2009 when it started and review.
I'm making you the minister this morning. I'm making you the minister this morning, or maybe 2 weeks. I'll take you back 2 weeks. What can you do?
Look, I think that the first thing you do is you have to cut your appetite for borrowing. All right? Now, Ken and everybody in the financial sector will tell you that's the worst thing that you can do. Because if you cut it, you've got no cash. If you have no cash, you're literally finished. Okay? You have to find cash to meet your obligations. So irrespective of what you do, you still got to find money. I think that this country needs to just sit back and breathe in a little. All right? And particularly if I was in charge of the finance, that's my first step that I'm going to do. Let us take a very critical look about why we are here again. Okay? Now, those of us outside of the realm of the Ministry of Finance, but you say I'm in the Ministry of Finance, but I don't have all the information. But the one thing we know for a fact is that there seems to be an escalating debt buildup, and we are unable to sustain the payments as we go forward. The more expensive money is in the domestic borrowing. Okay, it's not in the foreign borrowing. We are issuing treasury bills every week like crazy. 800 million, 900 million. You are close to the market, Ken, if you have your finger on the pulse. But every week we are raising 800 to 900 million at 25%. Okay, and we keep having to pay back as we go forward. The whole strategy I understood at one point when I did discuss this with my former Minister of Finance, Tekpe. See, I'm now the Minister of Finance. Was that we would go and borrow the foreign money at a cheaper rate, and we would use it to settle the more expensive domestic debt, so that we change the proportion, the mix of the debt, so we would have more foreign debt and less local currency. Now, if we did that, the problem we would have is how to generate more foreign currency to be able to pay the ballooning foreign debt. And to do that, you need to figure out where your exports are going to. Now, cocoa prices have dropped, gold prices have dropped, oil prices have dropped. I'm not too worried about the oil money because it's not really a lot of money. The cocoa and the gold are the props that we are using here. But my main concern is going to be, how do I, as government, cut my appetite for domestic borrowing? To do that, I would shift the mix from me, government, borrowing too much in the market and let the private sector do that borrowing. In essence, government must come out of the domestic borrowing cycle that it finds itself, and it's a vicious cycle. To do that, I'm going to look at my expenses very critically, start off with, and I'm going to figure out how I can shift my public expenses over to private sector development, so I don't have to carry that burden of spending so much money every month. That's number one. Number two, I will look at my revenue lines and I'll see what it is that I'm not doing right to bring in adequate revenue. In this country, a few corporates are the only companies that are really taxed and taxed very heavily in order to be able to bring in corporate revenue. The bulk of our taxes are coming from indirect taxes, which is from VAT. So the rest of it really is neither here nor there. That's where the domestic money is coming from. So mine will be, first of all, let me see how I can rationalize my international debt from my local debt. And I want to take my local debt portfolio and I want to manage my local debt portfolio with my local revenues that I'm carrying. All right? So if I can beef up my local revenues and cut my local expenses, I should be able to manage my domestic debt a lot better. Now, I'm saying this knowing what I know at this point in time. And I don't know exactly how much is out there that we have to claw back in terms of the treasury bills that are out there that have to be redeemed. So it might not be an instant thing overnight. It's going to be something that you have to plan gradually as you phase the borrowing out. And most critically, we need to get to the point where the government is not crowding out the private sector, allowing the private sector to go and do the borrowing, and private sector should then develop economic activity to pay back the debt that it has taken. And government has to really rationalize its expenditures drastically in order to make all this work. That, for me, is the way I would approach it, not the way we're doing now, just borrowing money and directionlessly not sure where the money is going to be spent.
Kenneth, in my intro, I was saying that as a country, we are borrowing a lot, and as a country, we are spending a lot. And most countries do, either they spend their way out of trouble, or you cut back out of trouble. But we seem to be borrowing and we're doing both at the same time, but we can't seem to get out of this trouble. We see roads are being built, hospitals are being built, all these things are going on, and we are borrowing, but...
Okay, you see, let me tell you a story.
Yeah.
Let me tell you a story. You earn 1,000 cedis. You earn 1,000 cedis. You have a large lifestyle. You have a lavish lifestyle. So you have a lot of domestic servants. You spend 700 cedis on paying your servants and paying for money that you've borrowed. You don't live with your children. You live somewhere else. You have light, you have everything. When your children go to school, they are sacked because they can't pay school fees. When they go to the hospital, they will not be looked after because they have debts they haven't paid. And that's the situation in which we find ourselves. I mean, that's the situation. It's a very simple situation. Okay, either you increase revenue, or you cut costs, or you do both. Because at some point, it becomes unsustainable. And one thing that I've always said is that it's not even so much the fact that you're borrowing. Yes, that's critical. But you can't continue to borrow to consume. You cannot continue to borrow to consume. I remember when this whole concept of emerging markets came about, some countries took it to heart. So from maybe like 2006 onwards, we seem to think that if we borrow and consume, one day we'll wake up and we're as rich as South Korea or Taiwan. It's not possible. There's certain things you need to do to give you wealth. You need to build an infrastructure. You need to build schools, roads. I mean, you need to make sure you strengthen your regulations. But one thing that I've always said too is that we need to allow, and this, the politicians agree, but it's almost as if there's a certain pride in keeping the cedi at a value which is not sustainable. The Ghanaian cedi is overvalued, and the cedi will fall. I mean, that is a non-starter. It will fall. It will continue to fall. The issue is the rate at which it falls. But we have to get to the point where we allow it to fall to the point where it now starts to promote exports. It starts to promote exports. And then it makes imports expensive. Because buying made in Ghana is not an emotional decision. It's a financial one. You're wearing a nice shirt, but it's not an emotional, it's not emotional, it's a financial one. If another one came from China and it was cheaper, you'd buy it. So for me, you've got to either increase revenue, cut costs, or do both. There's no way out. And the danger with, you know, when we went into this Eurobond market, what it's led to is that, you know, in the past, you went for concessionary loans. So under the concessionary loans, you had to say exactly what you do with your money. So I'll build this road, I'll build this school, I'll build this right. With the Eurobond, you go and say, I'll do these things. When you come back, you change your mind. And nobody says anything. And you continue to consume. You cannot continue to consume. And in any case, you see, once you have a certain level of debt, even as individuals, people are afraid to do business with you. They're afraid because they don't feel secure. So suddenly people don't bring money into the country. You know, people are just insecure. If people are not secure, they will not bring you money. And then you've got to at least show a credible plan. And a credible plan is what, a credible plan would be a plan with assumptions where any reasonable person would say that, you know, it's possible it could work to show how you repay your debt. But unless you do these things, you're really on that greasy pole.
In short term, I mean, what does the finance minister do in short term? Because he's faced with this, and I mean, the scenario you paint next year is even frightening because then we're moving even towards elections, you know. And here you are, you can't borrow anymore, you can't print more money, and you know we are obsessed with elections. We have to win.
You see, if I don't, the danger is that if the government should cave in, if the government is pressure to spend, that means it has to issue more treasury bills. Okay, but the thing is that to make those the bills attractive for people to give the government wants to borrow, but for people to give the government money, they're going to make it attractive because already the government owes a lot of money it hasn't paid, so there's not a lot of money around. So suddenly the interest rates will start to rise. I mean, interest rates in this country have gone over 40% at some point. It went over 40%. So if you run a business, for every CD that you earn, 1 CD, you pay 40% as interest. And we've got to remember that most businesses, 99.99% of businesses, rely on credit to be able to operate. You've got to pay 40% for every 1 CD that you earn. 40% of that goes to interest. How much do you get to for the cost of the goods? How much do you pay for, you know, your workers? How much profit do you make? It becomes to look very crazy, very, very, very frightening.
40%.
It has happened in this country. See, it went to 40%, didn't it? Yes,
it
was November, the 90s. It was 40%.
Yes, it went to that.
Why did it go to 40%? Because, of course, the government needed money so much, it had to make it attractive for people to give it money. And everybody put their money in treasury bills. Even my grandmother is stark illiterate. My grandmother bought treasury bills. My grandmother, stark illiterate. She bought treasury bills.
40%. Was that attractive?
So cross your legs, sit at home, and the government gives you 40% on your money. There's no incentive to work. You know, and for companies like us, where our business is to buy and sell money, because principally that's what we do. I haven't been there yet, so I don't know. But I haven't been there, but I mean that's a whole different ballgame.
So let me repeat this story. I mean, for those who are regular viewers, it may sound like a broken record, but I was interviewing the mayor of Harrow, and when David Cameron took over power, he thought, look, the Labour guys have borrowed too much. I'm going to be prudent. So they go to collect the budget for the year, and it's £75 million short. They give them the money and say, you can't touch education, go. This is your money, you can't touch education. However much, how are you going to do for this 75 million short to run the barrow, go and do it. Anyway, they did all these prudent things, you know, to try and get the, the money to. I mean, can we do something like that? But here we are. You see, like with Harrow, what they then decided to do was they share. You find Harrow sharing a police station with South Harrow. Wembley and Harrow are now sharing a hospital. Barnet and Harrow are now sharing a library. Wembley and Harrow, they are sharing. So they just say, look, I pay 100, you pay 100, and then we share these things. Yeah. I mean, can we do something like that? But we are short of policemen, we are short of hospitals, we are short of this. So where do we cut to save this money?
You are promoting an idea that might take us another 4 hours to discuss if we really get into it, because what you're talking about are independent boroughs all right, in all of England, who have a certain budget, and they are responsible for their budgets, and they are responsible for making their own decisions and working their decisions out. It is akin to the US federal system, if you want to look at it that way. And most of your Western countries work that way, where in Switzerland, the canton is responsible for its people and its community. In Germany, you have your groups like that as well. And you have all of that, which works very, very well because all the persons who lead that particular canton or that community are elected persons. And once they mess up, they don't have a job the following 2 years or the following 3 years. So you can only make this work in Ghana, in my opinion, if you fully decentralize this economy. We need a paradigm shift. The paradigm shift has got to be that every region must have its autonomy. And every region must run itself by a person who is either a mayor, a governor, or a regional minister. Call them person what you want, but that's what you want there. But that person has to be an elected member of that council. Okay? And you have to do it from district level. So you can manage the resources there and not have to come all the way to the central all the time to divvy the cake up and to make things work. All we are talking about here now, every region must have its own, if you want to, central government type arrangement where they have their own coffers and they manage their own funds, all right? And they come under an umbrella organization which is more national and which is more coordinated. It's a completely, it's a very important way of running our economy. And unless and until we are ready to start considering how all this should work, we can't do it. I'll tell you this. I've just come from a book launch by Dr. Adukufor. He just launched his autobiography. He called it The Gold Coast Boy, or Gold Coast Boy. Gold Coast Boy, not there. He just says Gold Coast Boy. One of the key speakers was Professor SKB Asante, Nana Asokore, Paramount. And he made two clear points, okay? And the only one the other one is a little unimportant because he was talking about we not respecting our ancestry. We tend to look at our ancestry as fetish. And so we do not respect our ancestors and we do not factor our ancestors into our family home so that the children will know where they come from and how they actually, what their culture really is. That's one side. But the second most important side that he said was that, you see, we inherited the first past the post system from the British colonial masters when they were ruling this country. They brought in the first past the post because at that time they were running a first past the post system and they didn't know any difference. Today Britain has moved on. It doesn't work only a first past the post system. Depending on its layer of political activity, it does a proportional representation type system and it mixes it up with the first past the post at certain levels. They have moved on. If you go to any of the other developed economies, except in America where they have the awkward system of a delegate's vote, which is a completely different way and a different beast, you don't look at it. But if you look at all the other countries, New Zealand, Australia, Canada, Germany, France, they all have a proportional representation type system into parliament. That way, when you do it, it is the number of persons who vote for you that gives you the number of seats that you have in a parliamentary system. And the idea is never to have a parliamentary system, but to have a committee type system where committees actually determine how the national cake is divvied and who gets what as we go forward. So different way of looking at it.
Let me take a break from here, and then when I come back, I'm just trying to find out moving forward, how does the state save money, and will this work where, Shanti region gets the 100 million, look, this is your lot for the year, whether you can manage it or not is up to you. Whether you buy Land Cruisers with it is up to you, or whether you give your ministers bicycles so that there's, you can spread the money, it's up to you. Would something like that work so that we stop going to borrow? We're coming back. Well, thank you very much for staying. Borrowing out of trouble. We are in debt, so what do? Let us borrow more money, pay the old debt, then next year borrow more money, pay the old debt. And I'm just trying to gear the conversation, rather than go through all the technicalities of, the weighted average and this, let's just sit back and look at it. And I'm just saying that as a country, we have 10 regions. So come January or come September, whenever the budget is read, Setepe sit down with his checkbook. Well, Ashanti Regional Minister, there's your 300 million. There you go. See you next year. Ashanti Region knows I have 200 teachers, 10 policemen, 5 doctors, whatever it is, and you know that this is how much it will cost me to pay them and all that. So, Kenneth, he goes and then, he just, look, this money should last me a year. So therefore, maybe nobody can drive a V8 here. At this money, you can't. Maybe no air conditioners in the second office. I mean, you just have to be prudent, because when the money runs out, it runs out. And your citizens or electors know that, listen, you have 300 million, which you should look after us till the year. I mean, would something like that work, or is too harsh?
Well, we're getting to a point where we've got to take some very hard decisions. Whether the point is tomorrow or next year, I don't know, but the point is coming to that point. There is some, first, what I need to say is that, look, the leadership of this country, they reflect the people.
No two ways.
The people pick those who represent them to be leaders. Okay. But, it's important, if we're able to get the people involved, more people involved in decision making, it's more likely that the things that we want done could be done. Because I think in Uganda, places like Uganda, they actually make public, if there's a project, how much money is come, who's supposed to do it, extra, and then they found out that results in more money getting to the project. Because, for example, I see project sites. We all see government project sites. It would be nice to know that this is $20 million, this is how much been disbursed. Yeah. If that information was available, suddenly the way we look at it will be completely different.
You could compare the next route. Hold on.
Exactly.
How come they did 10 kilometers?
Exactly.
The same 10 kilometers with twice the amount of money. That's the secret to transparency.
The irony is that it's our money. It's our money. We need to know. I mean, it's our money. So I think that will go to some, a large extent to help us to be able to execute projects. But we need more information. It's our money. We need more information. The more information we get as to how our money is being spent, the better we are able to make the choices as to how they should be spent. So, I support really decentralization. It doesn't necessarily mean that there will not be excesses, but at least people, if, for example, you knew that to sweep this road, somebody had been allocated 100,000 cedis. Trust me, every morning, the way you look at the road will be completely different. Complete.
100,000. You still leave this.
Exactly.
You still leave this paper on there.
A few and especially when you know who is responsible for it.
Completely different.
From where we find ourselves, where we are trekking up and down trying to find cheap money, or it's not even cheap money, but basically to pay off all debt. And should we come to the time where, look, you look at the region, look, you have this amount of schools, you have this amount of that, you have this amount of people, therefore you get maybe 17% of the GDP, take it, you go. You get 2% of GDP, go. You get 30% because of the things in your region. And then at the end of the year, you disperse the money. The people in the town know that, listen, this is how much they've gotten. Everybody should be paid till January. Pay the money they've gotten, and maybe a little extra to do something. Go.
And I want to do it differently, because I'm a firm believer in full decentralization. All right? I'm saying the region should be responsible for collecting its own taxes. Not central government taking 17% or whatever it is and then giving it to the region and saying, here, go and spend it. No. The region must collect its own money at that and keep its own money, and then do the converse. Cede 5% of that to national coffers. All right? Right now, we collect all the money at national and we give 5% to the regions. It's wrong, because at the end of the day, you're going to take that 95% and you're going to try and spread that cake, including how much you're giving to the District Assembly Common Fund. And we are ceding currently 5% to the District Assembly Common Fund. Then 2.5%, again, of the national cake goes to the MP's share of the District Assembly Common Fund. So 7.5% of all of that goes to the DACF, the District Assembly Common Fund. I'm saying reverse it. Because if you read the Auditor General's report, going back as far as 2009, which is what I've been able to find, up until 2014, every year, the Auditor General is finding the District Assembly Common Fund irresponsible and reckless with the money that it is being given. Even so much to the extent that a lot of the money that goes to them never ever even gets to the districts, which is where development and infrastructure is supposed to happen. So you need to shift the thing. 5% should go reverse and let national man its little portfolio that it has and its travel and its foreign affairs and its whatnot and interior, and the rest of it should be down there at the district level. Then the districts would start developing. What would I do if I'm, say, in the Volta region, all right, and I'm collecting all my taxes and I'm trying to manage? One of the key things I say is you need to build agriculture in this country, all right? Now, to build agriculture, you must take a particular product, okay? You must take a particular product and you must use that particular product, all right, and develop it to the point where you have excellence in that product, which means that if we decide that in the Volta region we are going to grow Gary, we are going to make Gary, it means we have to intensify cassava cultivation and use it in such a way that we get scientific methods to be able to increase the yields in cassava. Then we get into cassava processing, which will be done to such a fine extent that it becomes the best quality cassava you can find, making it available both on the local market and creating an exportable market from the way you will package it. We have enough West Africans and Africans outside in the diaspora who will buy the fine Gary that they have, because all of us in the sub-region, we eat Gary in one form or the other. When you start doing that, for example, in the Volta region, and you get that kind of excellence, you can now go to the Brongahafo region, where they have cocoa, they have tomatoes, and they have all other things else there as well. Then that becomes excellent agricultural produce as well. They then start generating revenue and employment for their people who are prepared to come home and work the lands and create employment. Now you're beginning to see a paradigm shift, because it doesn't become important now to come to Accra, to come and live in fine cities and carry baggage on your head. Because you're now giving them an opportunity to create wealth and enjoy their incomes for themselves. This, for me, is the way forward.
Let me go to Ken. We've gotten 1 billion, but we know that interest payment on loans at the moment, I think it's about 3 billion. So how far can we stretch this 1 billion?
That's the $1 million question. But just before I get there, you know, for me, the private sector is the game changer. The private, and I keep saying this, and it is so, you know, the government has always been a poor allocator of resources. It doesn't allocate. See what private sector has done in media. See what private sector has done in telecoms. See what private sector has done in health. See what private sector has done in transportation.
In education.
Yes, see what private sector has done in education. The private sector is the game changer, full stop. I mean, the private sector is a game changer. But, I think that the quicker we start to get on that road, the better. The government does not know and cannot allocate resources. I'll give you a story about cocoa. You know, when cocoa came to Ghana, and this is something I learned in first year economics at the school in Legon. I mean, everybody's told. When cocoa came to Ghana, cocoa was new to the country, but it was adopted by everybody. People, teachers, office workers, managers, blah, blah, blah. Why? Because there was an incentive for them to produce cocoa. The price was, it's incentive structure. The private sector is the game changer. It's as simple as that. The private sector is the game changer. As for interest, what is going to happen? And this is what is going to happen. The interest rates will start to climb. It's 10 points. But I can see, you know, because the whole world economy is slowing down. Okay. So as it slows down, you know, China, which has been the biggest importer, is the biggest importer of commodities and consumer of energy. The demand falls. Okay. So if the demand falls, price will fall. So our income is going to fall. Interest rates will start to creep up. Interest rates start to creep up. At the same time, our supply of dollars is falling. Because supply of dollars throughout the world is falling. You know, when the Chinese the recent stock market crash, they were spending about $10 billion a day. They spent for 2 weeks to support their currency. Australia has slowed down, so less dollars. Brazil slowed down. Everybody comes in, so supply is going down. So the cedi will depreciate. But that means that we have to find more and more cedis to pay for our debt.
And we are not allowed to print anymore. Let me take my last break and come back, because I won't want to be the finance minister. Stay tuned, we're coming back. Thank you very much for staying. Borrowing out of trouble. I'm trying hard to get answers here, but the answers aren't just coming. Sydney, is it that we just need to wait, get the system to crash, and then we get up, or something could happen between now and getting crashed?
No. I don't want to go there. I was in England. I was living and working in England during the Thatcher years, when Margaret Thatcher was following similar economic policies, and she wasn't prepared to get anybody's advice to change the direction which we go. If you remember, they came up with this, the lady is not for changing, if you remember. And she went over, and eventually we got to a point where the whole thing collapsed, and she had to, more or less be lopped off. I don't want to get there again in my life, because it was very, very difficult time for me in England at that time. There is no point waiting for it to collapse. This country has been through this cycle before. We know exactly what it means when we say government is crowding out the private sector. We said it during the Jerry Rawlings time. We said it over and over and over and over again. And we are back where we were all that time again. And the lessons don't seem to have been learned. There are things that are sitting on the shelves and the tables of the Ministry of Finance that have been written, and solutions have been suggested for how all this can be fixed. It's time to take them down, dust them off, and start putting some legs to all of this and making it work. The problem we are facing, and as much as Ken and I share the same thoughts, I don't agree that I'm a reflection, that Mahama is a reflection of what I believe in and what a majority of people believe in. We have our differences on that one. Because I sincerely say that the politics of this country are so discombobulated, all right, that it means afro me. Okay. All right, they're so it's so desegregated. All right, it's so dissected that at the end of the day, what you see representing you in Parliament is not what you really thought you were doing. Okay, Parliament is a popularity contest. It is not a contest of ideas. It is not a contest of smart people. It's a popularity contest. The person most popular in the district is the person who ends up in Parliament, and that does not make him a good legislator. It doesn't make him a good debater. It does not make him a good thinker. So we are ending up with people in Parliament who don't bring any value to the debate and discussion in Parliament, and we are suffering the brunt of it because we can't see the results of what we are asking them to do, and they are not up to the challenge.
Finance. I mean, are there any short-term solutions, or we just have to ride it out?
We've been here before.
Just to borrow. Short-term solution, just borrow.
Short-term cut expense. You've got to cut
expenses.
You've got to cut expenditure. You don't have a choice. You've got to cut.
But what do you cut? We don't have enough police. We don't have enough doctors. We don't have enough teachers. We don't have enough. We are short of everything.
You see. Look, you can only spend what you have. So maybe you can only afford 5 policemen. Have you thought about that? Maybe you can only afford 2 hospitals. Have you thought about that? You can't spend what you haven't got. But I mean, seriously, you've got to cut expenditure or increase revenue or do both.
And Ken,
that's the only way out.
Ken, sorry to cut in, but you see, when you say cut expenditure, it doesn't mean throw them away. But what it means is government should back out of spending money on certain things and allow the private sector to pick it up and run with it, so that government's expenditure is lowered, but private sector is now economically active.
You see, for example, I mean, if I had my way, for all those schools in Cape Coast that people clamor to go to, give it to the private sector.
Yeah.
Why is the government paying for people to go to boarding school there? If you can afford it, go there.
I wish we had more time to
You don't
talk.
think I'm going to go there?
I told you,
More time
I told
to
you,
talk.
open up a 4-hour discussion. You still have time to exhaust it.
Thank you very much, Sidney Casely-Hayford, financial analyst, and Kenneth Thompson, CEO, Dalex Finance, first time on the show. Thank you very much. I want to say thank you to Tantiz, who sews my shirts, and you can get Tantiz on 02436 2001. 02436 2001. Thanks to Azalu, Aisha, who've all put the show together. Tomorrow we'll be back to do this all over again. Thank you for watching. Guys, thank you very much.
Thank you, Dada. Thank you.